Trade the Close with Shawn Cruz, Trader Strategy Manager at TD Ameritrade. Shawn, what's lifting us higher here into the close? Is this an earnings story or gearing up for the Fed? What are you watching?
Yeah, I think it's a lot of this is that earnings story. If you look at what we saw out of Google this morning, there's actually more than able to make up for some of the weakness in Amazon. And I think that is something to look at moving forward into earnings season is pay attention to those companies that have large weightings in some of these indices like Google, because good beats out of those companies moving higher by a little over 10% is what we're seeing from Google. That can really drag those averages higher and actually make up for weaknesses elsewhere.
Shawn, do you feel like the market in general is positioned a little bit stretched going into next week and into the Fed meeting, or are people essentially just, feeling like they have to participate right here? What's driving this tick to new highs?
I do think investors want to be in this market right now. They are expecting an accommodative Fed moving forward. Now, whether that's a 25 basis point cut, whether it's a 50 basis point cut, they are expecting some accommodation from the Fed. And now if you look at earnings season, earnings actually looks like it's going to come in better than what we were expecting. We're seeing some pretty good surprises for all the sectors except for consumer discretionary. But I do think right now you've got a solid growth backdrop from what we're seeing in the economic data, solid earnings growth, and you have a Fed that's going to be somewhat accommodative moving forward. Those are good. That's a good backdrop to have if you're looking to put money to work in the equity market.
Within the improved backdrop, Shawn, is there a sector to you that looks particularly ripe in terms of valuation as a buy here?
Well, I think what I've seen out of earnings so far, I'm looking at actually the reaction post-earnings reports for some of these sectors, and there's actually a little bit of an interesting divergence. So if you look at IT, that's actually had about an 8% earnings per share surprise, but post-earnings, they've actually sold off quite a bit, a little over 2%. If you look at something like materials, the surprise has been about 0.9%, but they've actually had the best move after those earnings reports, being up a little over 1.5%. So I think that shows that maybe there's some opportunity and maybe there is a little bit of an overreaction in sectors like materials that might present some opportunity for investors if we continue to get solid earnings report and solid surprises out of that sector.